go ahead and post those also in the chat panel for the rest of you. So on this list, if you took a look at the shorts, the one thing that I noted is that at cold, this is something that Roger said, I really like this one. As a matter of fact, he took about 2 minutes to let a friend of his know about it, who he advises, in matters like this. So he really liked the way cold was setting up. As far as the longs are concerned, TER and ANET, he advised us all that those are some pretty decent A-line alert levels on both of those stocks, okay? And finally, as his closing comments, as we got ready to get into the open, he indicated, look, guys, if I look at the internals here, we see that bonds continue to retreat, and that's not good for stocks. Bonds was just basically falling below several key resistance levels, and typically where bonds go, stocks follow. But here's the weird part. The Mag 7 and blue chips, continue to be doing pretty well pre-market. And his point was, look, guys, I think these are overexposed, and the Mag 7 and the blue chips are basically continuing to drive the QQQ and the SPY. And he said over and over again, he said, guys, that's not a real picture. If you want to see what's going on, look at the rest of the market. Look at the QQQE and the RSP. And he said from that standpoint, he's expecting, or he says, let's just watch to see if money in the Mag 7 and the blue chips move out and start to move into those smaller stocks. And could we see a rally in the QQQE and the RSP? Or will bonds continue to slide lower and take the market with it? So at the end of it all, be very careful of potential heavy volatility this afternoon, as $6.3 trillion in stocks and equity indexes are all getting ready to expire. So those were his closing comments as he got ready to prepare for the rest of the day. And we've got a great group of people here. And I just want to remind everybody that we have a fantastic agenda set up. This is part 2, if you will, of a focus on trading strategies and techniques that he uses when trading the A-line. And specifically, he's going to be talking about selecting the right options for A-line stocks. And yes, he'll be talking about regular options as well as when to consider credit and debit spreads. He's also going to tell us how he uses anchored VWAPs on A-lines to find entries and exits. He's going to talk about the difference between trading an A-line as a pullback versus trading the A-line on a breakout. And then, and I think this is great, he's going to be spending some more time with us talking about trading psychology and why most people find it so hard to tap into this. Now, if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone. So remember the ground rules. Be kind, keep to the topic, no political discussions allowed whatsoever. Keep your side conversations, please keep side conversations to a minimum so that we can all focus on the education and information that Roger is sharing. Because you know what, folks? He's here to give us an edge and to help us all become more confident and consistent in our trading activities. And with that, hey, let's say hi to the gang. Man, Matt, Roger, great to see you guys. Happy mid-Friday.
Happy mid-Friday to you as well. How are you doing today?
I'm doing just great. And it was interesting, Roger. I was doing a little recap this morning and I noticed that a couple of those small caps, hit their targets, when the market opened up, and one in particular, I guess AGMH, it was up almost $10 over, the pre-market high. So I don't know if anybody took advantage of those, but I just wanted to point that out.
You should see the emails that I've been getting all morning.
Oh, really?
Oh, I've been getting a lot of. Let me just tell you this, Raleigh, all morning today. All morning. Let me hide the captions. Let me share my screen. Let me get that. Let me just show you from this morning. CJET, that's another one that hit. Sandy made 500 bugs. Bugs for the third time or second time made 20,940 on the HGHM.
Oh, wow.
We got Jen that made money on Lennar. We got Sandy that made really 3,000 each on AMAG. I keep misspelling
I
this
know
thing. Just
that's a hard one.
it is a hard one. We have Don who made out like a bandit. We got Wesley who made out like a bandit. We got Bugs on the first, the one that. So I've been literally Becky made out like a bandit. Um, Raindrop made out like a bandit. So we had a lot of people. Let's put it this way: all morning today, I've been collecting testimonials. This is my testimonials from this morning. It's noon right now. This is my testimonials from this morning.
Good Lord.
I'm not kidding. I'm
Well,
not
there
even
you go.
that's this mor that's from this morning, okay? That's just today. So we have a lot to review. We have a lot to review. First thing,
Mhm.
let me go ahead and put my TC 2000 up.
Well, I'm so
First
glad
things
to see
first.
that. I'm so happy that people took advantage of things because, your approach to trading the small caps is very, very straightforward. And I know
Yeah.
that at some
Yeah.
point in the next few weeks, we'll probably have a little class specifically on that.
Yes.
But
Yes.
I put them in there before I came here tonight, and I don't know what to expect, and then I looked at it and I said, "Whoa, CJET! Oh my gosh, AGMH! Wow, outstanding!"
So we took a 20 we took a how much did we take, Matt, on Pal? We just closed out a weekly
Like,
cash flow trade on Palantir, which we initiated when did we initiate it? Yesterday, Matt?
yep.
We opened it yesterday. We took in how much did we make percentage wise?
We took 30 cents of 110, so like 25%, I think.
20 like 25, 27%. We
Yeah,
did
it's a
that.
little
Let us
over.
know if you made out on a 29%. Thank you, Scuba Chris. So we made out on Palantir. We made out on AGMH. That's the one from this morning that Raleigh was talking about. It went we called it at 760, then 870, and it went all the way up to 18, as we all know. Then a few folks emailed me about CEDG. Now this thing we gave this one today at 25 cents, and it went all the way up to 34 cents. Now 25 cents to 34 cents is a big move. That's like a 45% move, folks. And Sandy and others made a lot of money on it. I'm very happy to hear that. So these stocks, if you follow instructions, if you don't follow instructions, you're going to get screwed. But if you follow instructions, you're going as well as you see, you've been doing really well. So that's the second trade we closed. That's the third one, Raleigh, right?
Yep.
We're not done yet. We also did a time spread on Lennar,
Oh yes, I remember
and
you had to
I'm going to
hustle
talk
on
about.
that one.
Yeah, and I'll talk about that today. People ask me a lot of questions about it, so we're gonna do a little U-turn, and we're gonna before we get into the A line and all this stuff I want to talk about, I'm gonna take this apart because a lot of people really love these trades, and this is the only way I'll trade earnings. I will never ever trade earnings the way most people who follow me on this, they will never ever trade earnings the regular way again. Okay, so Lennar, we made out on this one. We sold it. Well, we basically got our 20, 30% on this stock as well. And while this morning we were in here, oh, by the way, we also the people who held on to what was it, the one we held on to yesterday in the pit? Hold on a second. Just 1 second. Today's been a busy morning. Very busy morning.
It sure has.
Oh, that was Lennar. Sorry, that was it in the pit. And then I gave folks this one in the pit at I gave folks this one in the pit just a few minutes before we started, and the entry was 5522, 5522, which was right around here, 5522, and it went up all the way to 5650. We didn't wait that long. We got out at 55.87, and I told folks after it was at 56.08 to get out. And it took about you know how long that took? That took a total of 9 minutes from 11:28 to 11:99. And Brett says made my daily goal in SYM. Bang bang bang. Pit rocks. So you made money in Lennar in the pit. You made money in weekly cash flow. Scuba Chris made 10% in SYM in 10 minutes. Good morning, Bugs. Bugs killed it today on the small cap. So we took 2 small caps. We took a weekly cash flow, and we took a pit, and we took a so 4 this morning. That's a pretty good for a pretty sleepy Friday, wouldn't you say, Raleigh?
I would say so too, especially with the triple quad witching coming this afternoon and all that stuff. Way to jump in there under the wire.
Yeah, yeah, and I still like SYM. If you guys are still into stock, I like it quite a bit. It's got actually a resistance level right here at 57.40. But honestly, if we can get past 57.40, if you're still in it, you got clarity here. You got clarity. This is very similar to what we're seeing in Palantir, actually. Like Palantir from right here. See this right here, Palantir? That's what you're seeing in SYM right now. Yeah, keeping a runner is very, very good. Okay, all right. I've got some really exciting stuff to talk to you guys about. I want to share this with you. Let me first say hello to everybody. Where are my manners? Richard Del Mastro, Mike, Deanna, Steve, ENRG. Oh, Palantir, 29%. Very nice. Stoic, Naples fan. Very nice. Edward, Tony, 50% on Palantir in 2.5 hours. Very nice. I like that. And Tom, Raleigh will give you that information. He'll give you customer service information. Yeah. Let's see. Wesley, Bob, Ken. Good morning, Ken. So good to see you. John, Izzy. Yes, good vibes to everybody, Izzy. Joel, Tim, Arturo, Jay Singer, Gus. Used A-line scanner this morning and closed out 25% winner. I like that, Gus. We're going to talk a lot more about A-lines today. AGMG or whatever that ticker is. I get dyslexia with that ticker, Raleigh. It was fantastic. Jay Sinker, Hopium, Jill, good morning. Steve. Wesley says, I need to adjust my mic. Do I need to adjust my mic, Raleigh?
I think it sounds fine to me, but as you know, it's directional. So from time to time, when you shift over and look at your other screen, you kind of fade out a little bit.
Yeah, I can't do anything about it. See, this room is the worst. It's like being in an aquarium. This room has horrible acoustics. So if I switch to a condenser mic, which is what I use in my room at home, which is treated, like, audio treated, I can do it there. If I try to do it here, I'm going to sound like I'm speaking from an aquarium.
But you sound super, buddy.
So I got to use a dynamic mic. I just don't have a choice. It's just going to sound awful.
Yep.
ACTC running. Yes, ACTC running. Peggy. Yes, you should definitely come to the morning show, administrator, unless you want to miss out on these great small caps. Will you have a class? Yeah, next week I'm going to try to have a class. Chris. Scuba Chris, 29%. I love it. Look at this, Raleigh. I mean, everywhere I look, people are taking profits.
Yep.
Nobody's calling me any dirty names this morning. I'm just, I don't think I've ever got that, but it's great. So good to see it. So good to see it. Good morning, Gregory, Shannon, Flying Ronan, Brett, Ken, Bugs, Mary, Tom, David, Andrew, Tim, Catherine, John, Derek. Do not know why it's taking Palantir. I don't know, John. I don't know. Everybody else seems to not be having any problems with it. SB, good for you, SB. That's not the worst idea. Christopher, Kathy, Jeremiah. Hello, Jeremiah. Dave, Ronaldo, Patrick, Raymond, Shannon. All right, so everybody seems to be okay with the sound. Sometimes when I move around, I just can't do anything about that.
Nope. But even when you turn your head sideways, it's not bad, Roger.
Oh, okay. All right. GGAL, I don't know. I've been calling out this stock for quite some time. Thank you, Gregory. I'm so happy to hear that. Thank you very much. That's one of the stocks that was on my watch list. GGAL. I really like that stock. SMR. Peanut made money twice on it this morning. It looks like I'm doing a good job. All right. One of the ways to tell is if I'm actually being helpful to you. I could see that I'm being helpful to you. Roger, you're rotten and your people are stealing from the market. What can I tell you? That's my job, right? That's my job.
We're Robin Hoods.
And you know what I'm glad about? It's not like one trade or one service. People made money in the free channel, right? In the free channel, the free room this morning. People made money in weekly cash flow. People made money in the pit. Somebody made money with the A-line scanner. People are making money. In Alpha Zone Pro, everybody's always making money. Kate, I think turn up your sound a little bit, please, if you don't mind. I think I'm speaking pretty loudly. Let me just check my volume real quick, just so I can make sure I'm not losing my mind here. Audio settings here. Audio setting. I'm on Procaster. Test. Actually, you know what? I am a little low. I am a little low. You guys should be able to hear me. You guys should be able to hear me.
There you
You
go.
guys should be able to hear me better now.
5x5.
Not too much, but better now, right?
Yep.
Okay, and that may be getting okay. We're gonna leave it at that. Okay, sorry about that. So I was a little low actually. Okay, now I'm much better. Okay, all right. So I want to show you something, and this is a trick. A lot of people still don't understand. Before I get into the meat of today's session, let me show you what a time spread is, and let me show you how amazingly cool this is. And I promise you, you will never, ever, ever, ever in your life trade earnings the way most of you trade earnings after you learn to do time spreads. Even if it's a bad time spread, it'll be 100 times better than earnings. And let me show you. Let me show you the potential of this trade, okay? So yesterday, Lennar had earnings last night after the market closed. Ken says time spreads are phenomenal. That's from a guy who's a post-PhD in math. This trade is what... So this trade gives you an automatic bookie edge. Like, imagine you're Las Vegas. This is what this trade gives you. I give them for free as bonus trades in the pit. I just want to show you what they are. So we have earnings on Lennar last night. We did not know what they were going to come. No, but I'm going to do it next week, Michael, sometimes, because people are really asking a lot about it. So I'll do it. So Lennar yesterday was at 134. See, it was right here at the close. It was actually a little lower, but we went 134. So what we did yesterday was we sold the 134 call that's worth 3 cents right now. And we bought the 134 put. And we bought the 134 call expiring the following week in 7 days, okay? Now, this was a credit, right? And this was a debit because we sold this and we bought this. The cost for this transaction was, what was it, folks? It was 90 cents. It was 90 cents. So whatever it was, this was like $1. I don't remember what it was. This was like $1, and this was like $1.20, or this was like 80 cents, and this was like basically it was basically we had a debit of 90 cents, 95, or somewhere in that ballpark, 95 cents. Sorry, I'm a little foggy, Michael. I do a lot of stuff. But it was the 134 strike price. It costed us 95 cents, 90 or 95 cents. Some got it for 90, some got it for 95. Yeah, I said 90 and don't go above 95. That's what I did. I said, Sebastian, that sounds pretty good. I could do that, actually. Actually, I could do that easily. So you see right here how it's worth 3 cents right now? Now, so what did Lennar do? Lennar dropped like a rock, okay? Lennar dropped like a rock. And what did the 130, this thing was worth like $2 yesterday or whatever. What is it worth now? Nothing. There's no bid. It will expire worthless in about 3.5 hours, okay? But you also are long this sucker right here. You see? And this baby doesn't expire for 7 days, okay? So, this morning, when we went up here, the spread went from 90 cents to $1.35 or $1.30. Everybody who got in yesterday at 90, 95 got out at 115. Some got out at 120. They made their nut. They made their 20% overnight. But let me show you something interesting. Let's just say that this Lennar never went up here and gave us the opportunity to close it out. Let's say Lennar stays right here the whole day. Well, this is going to let me walk you through this. This is very, very cool. Check this out. So first things first, you're in the whole 90 cents or 95 cents, right? It's one trade. It's a time spread. It's a calendar spread, just a calendar spread. Short, long. So you sell this and you're completely covered. You're never naked because your long expires in 7 days. This expires now. So if this goes to 1,000, this goes to 1,000. If this goes to 0, this goes to 0. You've got 7 days to make your move beyond this. So your broker's Your broker's like, yeah, go ahead, do the trade. What do I care? What are you going to lose? Your debit. That's it. So you're in the whole 95 cents. Pay attention how cool this is. This is an earnings trade, and you can only do it on earnings because implied volatility is twice as high here as it is here. This is a bookie trade. Peanut went in 120, out at 145. Whatever. The point is, we went in at 90, 95, and we got out at 115, 120. That was the alert, okay? But look, let's just say we never got out. Let's say the trade screwed us like a pooch. Okay, so let's walk through the worst case scenario. Watch this. You guys are going to love this. Yeah, 95 out of 135. That's a very nice return. And your risk was 95 cents, but let me show you how cool this is. You guys are going to love this when I show you this. This is the best part. This stock, this option, is going to expire completely worthless today. Worthless. And then, now let's say you don't like the trade anymore. You're like, nah, I just don't like it anymore. Okay, fine. Get out at 85 cents. Take a 5-cent loss. Earnings are over. The stock crapped out. It's down 4%. The stock, not the option. And you could have got out at break even, but let's say you didn't. You can get out right now at 80 cents. Okay, you take a little loss. But that's not how you roll. Let me show you how you play this. You hold this for next week. And if this baby goes up to like 131, 133, just comes up here a little bit to the high of today, remember, you don't have a hedge anymore. This is going to be in the money. So imagine Lennar next week goes from 127 back to 134 with like 2 days till expiration. That this option right here would be worth about 160 or 190. You paid 90 cents for it. You have unlimited profit potential right here with this option. You literally have unlimited profit potential because this option is dead today. So after your hedge is gone and your option is worth just a hair less than you paid for it, but you've got 7 days to go on this thing. Now, usually I don't pay 95 cents. I usually pay like 30 cents, 40 cents. And my potential sometimes is to go from 30 cents to like $5 by the end of the week. So imagine you do a time spread, the trade goes against you, does completely what you don't want it to do, and you make 2,000% return on it. 2,000% return on it. 1,000% return on it. 100% return on it. 500% return on it during earnings. Now, are you ever going to do the stupid way of buying, of trading earnings, buying an option before earnings? When it's really big and overinflated, when implied volatility is 150% of what it should be, what we do is we sell it and we cover ourselves with one that has very little implied volatility. And then we let this one expire. We let all the fools lose all their money, and then we come in for the kill. That's how you trade earnings. And that's the only way you trade earnings. You know why? Because that's the way the market makers trade earnings. Now, let me ask you, do you think the market makers are in the mood to lose money?
Never.
No. You trade earnings your way and you trade earnings my way 100 times, and let's see who comes out ahead. You will be in the poorhouse and I will be having dinner with Warren Buffett. That's how you trade earnings. Roger, where do I find trades like that? I give them for free as bonus trades in the pit. All the time, always. That's how you play that game. Okay? All right. Wanted to show you that. Hopefully whoever was, don't ever, if you ever trade earnings the old-fashioned way, the guy who's giving you those trades has no idea what the he's doing. He has no idea what he's doing.
Oh my gosh, the comments here are amazing. Roger, is there any risk of assignment on this trade?
Yes, there is a risk of assignment. If so, great question. But so let's say Lennar didn't go down today 5 points. Let's say Lennar went up 5 points.
Yeah.
We can either take profit on our spread, or you can let this exercise, and then you can exercise your long, and your risk is 90 cents.
Okay.
But I can assure you, I'll be able to offset that position for about 3-4 hours, way better than that. If I know that's going to be what I would probably do, I would probably see it at like at like 75, 65, and I would just say, hey guys, we're going to get exercise. Just liquidate the trade.
Mm-hmm.
But a lot of the times, so look at this. If Lennar opened a little higher, we made money, right?
Yep.
Right. If Lennar opened a little lower, we make money. We made money, right? Not a little lower, 4% lower. Did we make money or not?
Yes, you did.
We all made money. So if it opens up a little higher, we make money. If it opens up a little lower, we make money. If it opens up flat, we make money. Wait a minute. You're telling me you found a way to make money on earnings like that? Yes. Yes. And I give it to you for free in the pit all the time. We've probably done 20, not 20. No, I'm lying. I don't know, maybe 15 this season. Maybe 12, 15 this season. And you know how many losers we've had? How many losers do you think we've had, Raleigh?
Based on the trading experience in the pit, I'm going to say 0.
Exactly. I think we might have had one when it was like a scratch or something like that.
Wow.
And I don't remember it, but if Michael says we had one, I believe him. I'm just going to accept
And so,
it.
Roger, going back to this, I mean, several people. So they said, let me get this right. So you're saying the mask risk is only 95 cents?
Yes. Because look, if you it happened to Carlos one time. He emailed me on Saturday. He was like, my this option got exercised. What do I do? I'm like, dude, just press auto exercise on your Thinkorswim. This will offset this. This will exercise a short. This will exercise a long. They offset each other at 134, and you only thing you pay is the premium and that's it. That's it. Simple, right? So, guess what Matt is working on as we speak right now? He's working on putting the implied volatility calculations and how often the stock doesn't beat earnings into data miner as we speak right now. So look, Roddy says, missed your spread, bought the long at 70, out at 145. There you go.
Yep.
Oh, by the way, SYM, the one I gave you in the pit at, the one I gave you earlier today, right here at 52.22 at 11.28. It's at 67.75 right now. I love the stock for a swing. If you want to hold it on over the weekend for a bit more love today. All right. Don't say I don't give you guys good stuff.
No, I know you've always been excited about this way to trade earnings, Roger, as the only way to do it. And you just proved it.
That's the only way to do it. Otherwise, look what you're doing. Look what you're doing. Otherwise, you're doing the opposite of what I'm doing. What you guys are doing is you're buying these options, and these options have an implied volatility of 150% compared to this. Mm-hmm. So you're buying options that are already pricing in a massive move. What I'm doing is selling them and buying the next week's out, and having the ones that I'm selling cover the cost. That's a better way to trade earnings. I think otherwise you're not just gambling. You have you don't have any edge. You're beyond gambling. You will go PK if you do it the other way. Because the market makers have the edge. You don't. The reason we make money doing this is because all the morons are buying options that are expiring right after earnings. That's what I'm making the money from here. Who do you think I'm taking the money from? All the folks who are speculating on what the stock is going to do tomorrow. I mean, yesterday. All right. It works on most, but I have a very systematic way of doing it, which we're putting into data miner, and I will be teaching you that. Okay, so now let me give you stocks that I'm looking at, and then I want to go back to A-line and cover a lot of lessons.
All right.
And by the way, you know that Palantir trade that we gave you in weekly cash flow that you guys all made over 20% on over the last 24 hours? That was an A-line trade. Okay. You're welcome. Remember, I tell you, I always like my A-line setups. What do you think this was before yesterday? Before this, what do you think this was? Mm-hmm. It was an A-line. So do you guys want to... You know how often I do A-lines in weekly cash flow? About 90% of the time. Do you guys like weekly cash flow?
Oh, yeah.
Then pay attention to what I'm talking about. I'm going to show you the setup that I use for the A-line. For swing, yes, they're always first swing. Yes, and Raleigh will ask me. I'm gonna close the chat because I'm gonna get into a lot of trouble if I don't. So I'm gonna just try to teach you right now, and we don't need to communicate. I think everybody got what they wanted from me today so far. I really like GE still. A little overextended, but I still like it. By the way, I got some good news for everybody. Beyond the trades, guess what Matt was able to do? He was able to, if I could find it here, where the hell is it? Where is it? Where's this is why has life become so difficult? I can't even find what I'm looking for. Hold on. Where the hell is it? Oh, there. No, that's the first screen. Where's my other screen? Ah, there it is. Look what Matt was able to do for me. He was able to do the here. Standard deviation bands. See the bands?
Oh,
Remember I
yes.
had him on. Remember we had him on the spy. We had him here.
Yep.
Remember that? I had to always bring my TOS here, right here. So Matt has created them for me right here. So now I have them on here as well. I may need you to, Matt, I may want you to also put it. Now that you have the formula, you could do it in a minute, but I also may want you to put it on here for me. The other, just in my other window, okay? Because I like to have it on all my windows. It should take you a few minutes. All right, real quickly about the market. So far, energy's down, but outside of energy, we have there's not much going on. Market internals right now, folks. Market internals are the Volt is starting to turn. Remember, after the second half of today is not going to be a typical Friday. We have option expiration. All bets are off. That's why I wanted to get a quickie into the day before markets really went up. Market internals are slightly negative, nothing crazy. We were at the threshold, but now we're getting back up. If I had to bet, I would bet we have a very choppy day with some more volatility. I would not suggest taking longer term trades unless you already have a position on. Because we may have some volatility. So if you can lock in some gains into your positions, that would be best. Okay, now let's talk about the A-line and some questions that I got. And a lot of these questions concern you guys. So let's go to Palantir. We'll use Palantir as our guinea pig this morning.
Right.
Let me go back to my questions here because I wrote out my questions. I got to say, I thought this week was going to be a very dead week, but we actually ended up
Be fairly
doing
active.
okay.
Yeah.
Okay. So the first thing I want to do is I hope you don't mind. I'm going to take these lines off of this. It'll just make it easier for us to read, and we don't really need to pay attention on this. So I'm going to spread that out like this, and then I'm just going to go ahead and remove this. Just makes it easier to see. So the first question is, how can you use anchored VWAPs to help you with A-lines? There's a trick that I'm going to show you right now, and I've showed it to you many, many times before, but a lot of people have still not figured it out. And by the way, this is a very nice A-line, very nice stock, very nice trend, respecting the 8-day EMA, rolling up, not overextended. Right here was the A-line, right here, and that's our profit today. But we take a lot of those weekly cash flows off of A-lines. That's what I use primarily as my trade. And there's another A-line that's setting up right here, right now, as well, that I really like. And I'm actually looking to take this trade potentially today. I was debating between this one and SYM. I really like this. You know what? I'll wait. Kind of want to give this as a bonus trade. I'll wait. But I really like the stock. I'm going to just leave it at that. I like ANET right now, and I still like Palantir. But what makes these great A-lines, and how can you time your entry with these? Let me show you. It's very, very simple. You take an anchor, and you put it at the last swing high. And you just look where it goes, right here at the bottom. It goes right to the 50-day moving average. All right? Right to the bottom of the 50-day moving average, right there. The 50-day and the VWAP. So that's telling you as soon as price passes this level, you have some directional bias that all the buyers who got in right here are not losing money anymore after this point right here. And we waited till right here. We waited for confirmation of that to get in. So we got our first okay. We got a confirmation. We took the trade, and here's our profit right there. So let me show you. Let me go back to ANET, and then I'm going to show you how we use the A-line to take credit spreads too. So ANET, same thing. Look. See that? Why do I like ANET right now? no part of this bar. Here, let me just delete this. No part of this bar is touching the VWAP, the anchored VWAP that I just anchored, a VWAP that I just anchored to the high. Now, caveat, you can't do this. You have to, the pullback has to be, I want you to write this down. It has to be fresh. It has to be fresh. The pullback has to be fresh. What does that mean? Well, let's say that we get a breakout right here. And let's just, for argument's sake, let's just say that this doesn't happen. The price action just hangs out right here, right here, right here, right here, right here, right here, and then starts coming up. And this is a high, and then the next high is this. Well, that's too distant. It's not fresh enough. See that? It's not fresh enough. That would be just a continuation. So let me give you a picture. I know a lot of you just don't see things the way I do, so I'll draw it for you. So here's what I'm talking about. Okay. Just pretend that none of this happened, okay? That this was the high and price went like this, like this, like this, and basically just continued right here, right? And we went right here. See the distance between this and this? It's too far. Well, Roger, how close is not far? I don't know. I never did it, but I would say about 2 weeks. 2 weeks is still pretty fresh, maybe 2.5 weeks. But once you start going, wait a minute, it's when you start looking at it on a chart and this happened all the way up here and this happened, it's too much distance. So you want something like this. You want something fresh. You want something like Palantir, where like right here at the latest, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, that may be a little too far too. Although on a chart, this is about as far as you'd want to go. You don't want to go further than this. Okay. Like anything further than that. And you can usually tell by looking at price action. Is the price action really coming up right after turning down on the last swing high? Or is it just stalling out? If it stalls out right here and then starts going up, consider this as just a continuation. And don't worry about drawing the VWAP because it won't be that effective anyway. When it's the closer they are, the better they are. Okay. You want you want this and this to be close together. Okay. Use your eyes. Use your eyes. Okay. Use your eyes. Ouch. Just hit myself. Okay. Now, remember I showed you that we could use these A lines, and we're going to have a class in A line in a little bit, but let me just say this, that you can use these sorry about that, Brent. So sorry to hear that. You can use A-line patterns for several different things. You could use them to buy calls. We're just going to stick to the call side for these examples. You can use them for the call side. You can use them for the put side. And you can use them for credit spreads and debit spreads. So obviously, we would only be dealing with calls or credits or call spreads here. We wouldn't be doing anything with puts here unless we wanted to do a debit spread, which is what we did on Palantir. So let me show you. So let's say that I'm expecting a stock to move, but I don't know. I'm not expecting a big parabolic move. I'm just kind of expecting a move like this. Well, a credit spread is pretty good in that case because remember, I fly close to the sun. So we did a credit spread. We went several weeks out. As soon as the money went out of the money here, we closed our spread. We sold it for 110, right, Matt?
Yep.
So that would just entail you going about 3 weeks out, 4 weeks out, and selling something like this and making sure instead of you buying it for less than 50% of the spread, you're selling it for about 40 to 60% of the spread. That way, if this comes down and we're wrong, you're only going to be wrong by 40 to 60%, not by 200%. Remember what most traders do? They sell the options right here. They'll sell a 5-cent option in hopes that this won't come down. Well, we go right here. What strike price did we sell, Matt? To give people an idea of how far we go.
On Palantir,
Yes.
we sold
It was a bull put spread.
177.50 and bought the 175.
What day expiration date? Right here, 21st.
No, October 3rd.
Even better. Okay, you said 177 and 175.
Mm-hmm.
Okay, so it was right here. This is what we did. This was the trade right here. Look how close to the sun we were flying. So most folks who do credit spreads, they would do it right here. Hey, where is Palantir not going to go in the next couple of weeks? We did ours right here. Literally, like right here. Do you see the difference between somebody who knows market timing versus somebody who doesn't understand market timing? You do it here, your risk is going to be 50%. You do it here, your risk is going to be 200%. I'm not being facetious either. Okay? I know several guys who use this stock, AVGO, and they just sell options where right here, and they take like 8 cents for every dollar, 5 to 8 cents. And they're right 95% of the time. But when they're wrong, boom, not good. Walking up the stairs, falling down. We go for the jugular. We go right here. So if I'm wrong, fine, I'm wrong. I'm not wrong that often, but when I am wrong, I'll lose 50%. I can go with 50%. I can live with 50%. Can't live with 3, 4, 500%. Or, you know, not 1 in 20, 1 in 20. Let's be factual. 1 in 20. So their risk is 20 to 1. My risk is half to 1. Do you guys see the difference? 50%, 200%. 50%, 200%. And I don't need a big move to be right. We were in here 24 hours. Now, let's say conversely that I was expecting a big move from Palantir, and I wasn't, especially in this market. Not at all, actually. But let's say that I was expecting a big move from Palantir. Well, then I wouldn't do a put spread. What I would do would be I would buy an individual call. I would go right here about 21 days out, and I would go to 0.73 delta, and I would buy the 175 call. Let's say I'm a little short on funds. Okay, fair enough. I would buy the 175 call, and I would sell the 177 call. And I would make sure that I'm doing this for $1.25 or less. How much did we do the spread yesterday? It was only $1.10. It was about 45%. So, but now it's more expensive than that because this has gone deeper in the money. So do you guys understand? We can use this A-line pattern. We could use this A-line pattern. I really wanted to take this trade, but I think I might have missed it. We'll see. We'll see if I missed it or not. I wanted to take it right here. I should have taken this trade right here. Right here. And I missed it because somebody was logging into this room with you guys right at 12. That's okay. It is what it is. We're doing great without it. It's fine. It's still not too late, by the way. And I still may do it. I'm not going to chase anything. So I wanted to kind of show you guys how you could do that. So let's say you wanted to, let's just pretend we're trading ANET. I like ANET, and I may take AMET. So let's see all the different ways we could use this A-line pattern. This is a perfect A-line pattern. Let's see all the ways. Look, you're above this high bar candle right there. Yeah, you got a little upside here. Got to make sure my eyes are not leading me blind. Actually, I prefer to get a little more upside now that I'm seeing this. So this is not bad. This is okay to wait, but I like this. So I like this price action. I like what I'm seeing here. We're nowhere too deviated from the 8-day EMA. So let's just go shopping, right? Let's go on a shopping spree and see what we can procure. So let's say that I was selling premium here. I'm not that confident in this market. So we would go 14 days out. We would go to puts. Oh, nice. Dollar spread. So let's see. Can we do this for 50 cents? Yes, we can. Do it right for about 50 cents, 45, 50 cents. I would go right here. You can even actually... or here, either 146 versus 147 or 148 versus 147. Either these two or these two. Basically, what I would be looking for is about 50 cents. I could probably get it right here. Now, if this thing moves from 148 to 150, 152, 154, this is going to be, this thing that I sold for 50 cents is going to be probably worth about 15 cents or 20 cents. If I'm wrong, let's say this goes down. Let's say I'm wrong. My risk is the difference between these two strike prices, which is $1, minus my premium, which is 50 cents, which I keep anyway. So, wow, we lost money. Okay, you lose 50%. You make money. You can make 50%. What's my accuracy here? Well above 80%, as you guys all know. So 50% loss, 80 to 90% accuracy. Pretty good. Okay, let's now take another, let's do it from another perspective. Let's say we believe that ANET is not just going to go up here. We think ANET is going to go up to 158 and it's going to make a new high. Well, what do we need puts for? We want to go to calls. We want to make some real money here. We don't want to be hedged on our upside. So we would go right here, 21 days out, as I teach you guys, 21 days out, 72 delta, not bad. I mean, it's not a great spread, but for the cost, it's not a bad spread. No, there's really nothing here right now, but you can get these off, or you can go right here to 14 days and you can get these off right here. 14 days. But what I would do is I would probably go 14 days and I would buy the 149 and I would sell the 150s, and I would do that for 35 cents. And my upside is $1 minus 35 cents, 70 cents. So I have a 2-to-1 right here. And you know what the best part is? Let's say I'm wrong. Let's say I'm dead wrong. Okay, I lose $35 per contract. Okay. Wow. I didn't lose $10, did I? I lost literally 35 cents per contract. Or whatever that cost was, right here. Yeah, right here. Now it's, or 40 cents. We can't pay more than 50, so the most we could lose is 50. So 50 cents per contract or $10 per contract. Again, all relying on our famous A-line pattern. So the A-line pattern can be used for directional trades, credit spreads, regular options, or debit spreads, all using my A-line tool. Let's see, on Palantir, and there was another one, Teradyne, right here. Here's another A-line. See how this happened pretty close to this? Here's another one. I'm giving you another one right now. I'm just giving you all the good stuff right now. So this is level. See how we have complete clarity here? No part of this bar touches this. That's what a beautiful A-line looks like. Okay? That's what a beautiful A-line looks like. This is a beautiful A-line. This is what a beautiful A-line looks like. This is an A-line in process right now. One day too late. We already took profits. But I think the more you guys see this, I think the more comfortable you guys will get on trading these. Raleigh, before we begin the formal class, now I'm going to give you a formal class on how to find the A-line. A formal class, like where I grade you. I'm just kidding. We don't grade you. But while I'm getting set up and everything ready to go, I've been talking nonstop for about 47 minutes. Maybe Raleigh can
feed you some questions. Yeah.
Yes.
I will say this, Roger. There are a lot of questions, and more than we can possibly address, because people are really focused on what you're doing and they have a lot of specific questions. For example, I mean, just one. Brent says, why a credit put rather than a debit call?
That's a good question. And I did touch on that, but I will let me just Matt, IBM gap to green. Just, do you see it?
Yep.
Okay. Look at that, guys. Beautiful gap to green. 1 second. We can add that to the Coinbase gap to green that didn't follow through, and we can add that to the DocuSign gap to green. Didn't go through. But I really like this IBM. It looks very nice. Okay, so let me answer your question. Let's go back to our example. I actually answered your question. Who was it that asked the question?
Let's see here. The question, I think it was Chris.
It really makes no difference. Whoever asked the question,
It
let
was
me give you
Brent. Yeah,
Brent.
Brent
Yeah,
Moore.
yeah. I thought it was Brent. Brent. The differentiator of whether I want to go long a debit spread, a call, or do a bull put spread is determined by two factors: what the market is doing and what my trajectory and my plan for this is. So let me give you all scenarios. We got into Palantir right here. I thought Palantir would stall out around here because I don't like the market right now. So I thought it was going to go up just a little bit. So I did a credit spread. Let's say I thought that it was going to go up, not here, but up here. I would have done a debit spread. Let's say I thought that Palantir was going to go up to here. I would just do a call. The type of trade I do here is determined by how much I think it's going to go up.
Yep.
Because you see, think about this. A debit spread is hedged. A credit spread is hedged. So my upside is limited. My downside's limited, but my upside's limited. On a straight call, I have no limit. I have unlimited profit potential. That's why I like those damn time spreads so much, because if that Lennar option expired today, next week's we have unlimited. We have 5 days that we can run up to infinitely. See, anytime you can decrease your risk and increase your odds of winning, you're putting yourself in an edge. So the question of what trade I do if I find a good setup is solely determined by two things: option liquidity. No, three things: option liquidity, implied volatility, and how much upside I believe I can get. And most of it is by how much upside I believe I can get. So let's take a look at here. I'm looking at A&ET right now. Let's say that and this is forward thinking right now. This is not hindsight 2020 crap.
Right.
So I like this stock right now. I'm thinking of taking it. So let's kind of go through. Do I want to do a put credit spread? Do I want to do a call credit? Do I want to do a put credit spread, a call debit spread, or just buy a call? Well, let's say that based on my analysis, we're going to play three assumptions.
Okay.
Level 1, level 2, level 3. Okay, so if I think that an A&ET is going to peak out here, I'm going to do a bull put spread because my upside is limited. I just don't want it to go down.
Right.
If I think that we're going to go up a little bit up to here, I'm going to do a call debit spread, a bull put, a debit spread right here. Bull put spread, bull put spread, bull put spread, bull call spread. Okay, bull put spread, bull call spread, and here I would just buy a call. So here,
all depends on where you think it's going to go.
Yeah. So here I'm taking in premium. Here I'm buying a hedged position, and here I'm letting it all loose. My upside potential determines which of the three ways I go on any A line. Maybe I should have probably started there, but that's that. So yesterday when we took Palantir, let me show you. So I don't like the market right now, and we have quad expiration today. I wasn't looking for a lot of upside, so I did the bull put spread. Let's say I thought it was going to go up here, then I would do the bull call spread, the debit spread. Here, credit spread with puts, debit spread with calls, just buying a call. Same scenario. And same thing here. Look at TEL. Here's that stock that I like. I really like this TEL stock a lot. Okay, this is not a. So this is an example of not an A line. You see the distance? This is not fresh. It broke down and then it starts consolidating. It's too far away, and it's already too high. But even if it wasn't, if it was here, too far away, too much distance. But this, on the other hand, definitely. No, already way past it. All right.
So
before,
can I ask you a couple other quick questions?
Yeah.
Roger?
Please.
Yeah,
I'm all here for that.
Yeah. So when you were talking about trading earnings, several people said, just for clarity, do you set up earnings the day of earnings at the high price selling, selling the Friday week of, and then buying the Friday the following week?
I do it the last opportunity I have before earnings come out.
Okay, the last opportunity before the earnings come out.
Yes.
Okay.
The last
Excellent.
opportunity before the earnings come out. So if they come
Okay.
out at 4:30 in the afternoon, I would do them at 3:30. If they come out the next morning at 8 o'clock in the morning, I would do them at 3:30. I do them at like right at the end of the day.
Right at the end of the day.
Yeah.
So the other
Yeah.
question that came up was, so in creating the vertical debit, you look for the BTO side at a delta of 0.70 or 0.50.
If I'm doing a credit spread, I look at 0.70. If I'm doing a debit spread, I look at 0.50. If I look
Okay.
at an individual option to buy, I do 0.70 again. So the
Okay.
only time I look at 0.50 is if I'm doing a debit spread.
All right. And then there were a ton of people that wanted to know how to do an anchored VWAP on Thinkorswim. And that may be something we just need to come back to.
Matt actually covered that about 2 weeks ago live here.
He did.
We
Yep.
gave him the screen and Matt, can you turn the heat down a little bit? I think it's too hot. Like put it at 71 or something.
Yeah.
Thanks. Yeah, Matt did it live, and he's not going to do it right now, but he'll do it for you maybe later in the week. But it's easy. Just go to Google and type in anchored VWAP on Thinkorswim.
Yep.
Yeah.
Absolutely.
On TradingView and on TC2000, you just do this. That's it. It's
Oh,
effortless. I would imagine Thinkorswim is the next version. They're going to no, I wouldn't, Naples fan. 2,000 on $2 is more than enough on ANET. I'm not looking for big moves right now because of the market, especially with the deviation we've been seeing. So I getting back to what we were saying. What were we talking about? We were talking about. Sorry, I'm all over.
No, we were just talking about. Some people had asked the question how to do the anchored VWAP on Thinkorswim.
I would imagine the next version they're going to come out with, they're going to make it easier. They're going to make it easier to do.
Mm-hmm.
It should be just slide with your. Thanks, Matt. I appreciate it.
And I'll answer. And folks, once again, for A-line alerts, remember this is an alert service. So when you get an alert from Roger, he's going to tell you everything that you need to know, whether it's a credit, a debit, or a call. You're going to get all that information in the alert, for you to enter.
That's right. And we've had 13 winners in a row on A-line, actually. Any other questions I can answer?
Yeah, is a bull put spread the same as a put credit spread?
Yes, it is.
It's a tongue twister.
It is, but yes, it is. It sure is.
Okay. All right. Roger, that about wraps it up. And once again, I just want to let everybody know here that the VIP room, like we've done today, this incredible education that Roger does at noon, every day, it's available to you as a replay. All you have to do is go to Roger's YouTube channel, and I just posted this in the chat. And as a matter of fact, I think shortly after we wrap up today, it's going to be there for you. So you can go ahead and re-review and see all this information and walk through it. But Roger, I think we did a pretty good job of addressing what was there. The thing I liked, Roger, is people were so attentive and writing things down. And it is our tendency to look for black and whites, okay? So exactly how far do I do this? When specifically should I get in here? How many bars back do you look? Those types of things. And that tells me people are focused. They're really focused. But sometimes there's more nuance than that.
Yes. Folks, I'm really giving you red meat. I'm giving you as much red meat as this is like as red meat can get. Okay. A lot of red meat. This is like real and one of the things I'll tell you about what I do, folks, there's a lot of stuff that you will read at books, a lot of theory. The stuff that I do, if it doesn't make money, real money, I'm not going to talk about it. Remember what I said. I only talk about the 5% of the things that make a difference. If it doesn't make a difference, we don't talk about it. Now, folks, I'm going to be doing a class right now. This is going to be the last time I do this class. I just showed you how cool the A-Line program is. Now, we're going to have a special that expires tonight. We announced it yesterday. A lot of folks took the opportunity to get in. If you haven't gotten into my A-Line program, you're really fooling yourself. You're cheating yourself out of something really good. This is the program that I would teach my kids if they ever decided they wanted to start trading, which they have absolutely no interest in, or any of my family members, which, again, have no interest in any of this. But if they did, this is where I would teach them. This is where I start with people at work, my wife's friends, everybody wants to learn to trade except my immediate family. I don't really get it. But again, maybe because they have me, they don't need to worry.